It's Tuesday, the 13th of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The number of deals across the ASX surges with 2 more yesterday, but are they good value for shareholders? That's our main story. Also coming up in today's podcast, the local share market jumps as the big miners benefit from new rules in China. New South Wales records the worst day in more than a year for community-transmitted cases of COVID-19. And banks told to get ready for negative interest rates. Then stay listening for my chat to a man who recently sold his text messaging business for $560 million. But first, here's a brief look at markets. Wall Street was higher in early afternoon trading, with the S&P 500 around record levels, up 0.3% for the session. The Dow Jones Industrial Average was 0.4% higher, and the Nasdaq was 0.2% better. European markets jumped after the ECB President Christine Lagarde said it was not the right time to dial back stimulus. Frankfurt's DAX hit a new record, while the Stoxx Europe 600 was 0.7% higher. London's FTSE was up 0.1%. The local share market jumped 0.8% yesterday to finish at 7,334 points, helped by a strong surge in the mining stocks. Over the weekend, China's central bank said it would reduce the amount of cash most banks had to hold in reserve. In effect, that puts about $200 billion back into the Chinese economy. And Australia provides the iron ore, that's the raw material in the massive factories across the country. That pushed up the miners. BHP's share price closed up 3.2% yesterday. Fortescue Metals was up 3.3%, and Rio Tinto closed 1.8% higher. Others to outperform yesterday included industrial property group Goodman, which jumped more than 2%. QBE Insurance increased 1.4%. CSL rose 1.3%, and James Hardie Industries was up 1.2%. Telstra was one of the worst performing large caps, off 0.5%, while Coles Group fell 1.2%. Oil prices fell back just a touch overnight, and gold prices were a little bit higher. And the Aussie dollar is trading at just under 75 US cents. There were 2 major deals announced on the share market yesterday, one being Wesfarmers buying drug group Australian Pharmaceutical Industries, and the other being Chalice Mining splitting off its Victorian and Western Australian gold exploration businesses, adding to the huge number of deals taking place on the ASX at the moment. In the past fortnight, a group of infrastructure investors offered $22 billion for Sydney Airport. The consortium included IFM, which represents 26 superannuation funds, and Australian Super. It's the biggest takeover offer in Australian corporate history. Seven Group upped its stake in Boral Group to at least 40%, giving it effective control. Tabcorp opted to demerge its lotteries and Keno businesses, rebuffing entreaties from suitors. AGL confirmed it would split into 2. The new group, Excel, will house coal-fired power stations, while AGL Australia will house the retail assets. Telstra sold a 49% stake in Telstra Infraco Towers for $2.8 billion to a consortium including the Future Fund and 2 large super groups. Ramsay Health upped its offer for Spire Healthcare in the United Kingdom to $2 billion, and Solomon Lew's Premier Investments took a 16% stake in department store Myer. Westpac sold its New Zealand life insurance business for $373 million. A US private equity group and a Bermuda life assurance company took an 18% stake in annuity provider Challenger, and Crown Resorts is mulling a merger proposal with the Star Group, which would create one gaming giant. And that's just the past fortnight. The pace of deal-making is ferocious. During the June quarter, the value of deals involving Australian corporates reached $99 billion. That's the best since 2006. It reflects the pent-up demand following COVID-19 and the economic recession, the excessive amount of capital available to corporates, particularly those who raised money last year but in the end didn't need it, and the likelihood of low interest rates and high government spending in coming years. The question, and it's a big question, is whether the money is well spent. Seven Group got Boral for a song. Telstra Infraco Towers was expensive, and there's plenty in between. Immediately after the last spending frenzy in 2006, the global financial crisis hit. It's different this time, but when there's such a frenzy, some companies will pay over the odds. Not all of these deals will provide adequate returns to shareholders. In a moment, the rest of the news you need to know this morning. In overseas news, European business activity, retail spending and household confidence have all jumped in recent months, triggering upgrades of growth forecasts. But tipsters are now worried about a COVID-induced slowdown. The weekly COVID infection rate for the EU rose to 51.6 per 100,000 people last week, up from 38.6 the week before. The surge is happening in the United States as well. On Sunday, the US reported the most daily cases since mid-May. There are still around 340,000 COVID cases being reported globally each day. Earnings season on Wall Street is about to kick off, and big US companies are tipped to post a profit more than 60% higher than a year ago for the 3 months to the end of June. If correct, that would make it the biggest quarterly rise since 2009. Wall Street is already trading near record levels, so any disappointments could trigger sharp falls in indices. And lightning strikes have killed at least 38 people across 2 Indian states in the past 24 hours. Most were in the western state of Rajasthan, with many of them farm labourers working in fields. Lightning strikes are common during the Indian monsoon season, which runs from June to September, but it's very unusual for so many deaths to occur. Locally, New South Wales recorded 112 community-transmitted cases of COVID-19 in the 24 hours to 8 p.m. Sunday, in Victoria too, as the federal and state governments scrambled to provide financial relief to businesses in the most economically important state in the country. A longer lockdown is now almost assured in New South Wales, as 34 of the cases announced yesterday were in the community while they were infectious. Both the federal and state governments are mobilising to try and stem the flood of infections. Mass vaccination clinics will be established to give the AstraZeneca vaccines to anyone aged 40 and older. Teachers and aged care workers in 3 local government areas in southwestern Sydney will be put at the front of the queue. More than 9 million jabs have now been administered across the country. Media reports today suggest the federal and New South Wales governments will co-fund increased cash flow payments for businesses on the condition they don't shed employees. And the National Disaster Payment Scheme is set to be boosted. The cash flow payments are expected to be similar to retention payments made to airlines last year. Economists are recalibrating their economic forecast for the September quarter. New South Wales accounts for 1/3 of national economic growth, and the hard lockdowns will also hurt employment and labour force mobility between states. Real estate agents are warning that auction volumes in Sydney will fall by more than 50% in coming weeks. And the next planned sitting of federal parliament, due to start in early August, could be postponed due to Western Australia, South Australia and Victoria declaring the ACT a hotspot. Meanwhile, the head of Wesfarmers, which owns Bunnings, Officeworks, Kmart and Target, has rejected calls to close non-essential retailers, saying current restrictions were enough. One of the biggest points of contention during the current wave of infections has been which stores should close. Currently, the rules in Greater Sydney area say people can buy but not browse, something I've never found possible in any store, particularly Bunnings. Wesfarmers Chief Executive Rob Scott said customers were overwhelmingly doing the right thing, notwithstanding several Bunnings, Officeworks and Kmart stores have been listed as exposure sites. Mr Scott said the businesses were being managed in a COVID-safe way. Bonus payments made to the top 100 company CEOs took their biggest hit on record during 2020, with almost 1/3 receiving nothing at all. The median size of bonuses to CEOs who did receive a payout fell to 31% of the maximum possible incentive, according to a survey by the Australian Council of Superannuation Investors. CEO cash pay fell 26%, though it was still $2 million. None of the bosses of Woolworths, Qantas, Sydney Airport, AMP and Mirvac received a bonus last year. However, the highest paid exec was CSL's Paul Perot, who took home realised pay of $43 million. Greg Goodman from Goodman Group and Shamara Wickramanayaka from Macquarie Group were also among the highest paid. The Australian Prudential Regulation Authority, better known as APRA, said it wrote to banks 7 months ago and told them to get ready for negative interest rates. This was close to the middle of the economic recession, remember, and the regulator wanted to make sure that banks had systems in place that could handle a minus sign in front of an interest rate. The Reserve Bank has constantly said negative interest rates were unlikely, but APRA wants to know that lenders could handle it if it happens. Prime Minister Scott Morrison has appointed 3 new department secretaries, all with defence backgrounds. There's a new Secretary of Foreign Affairs and Trade, a new boss of the Social Services Department, and a new head of the Attorney General's Department. Tough jobs all, and good luck to them. NRW Holdings said it will sell 38 major mobile mining assets to Boggabri coal operations for a bit over $80 million. The money raised from the sale of equipment used in mining will be put towards lowering NRW's debt and improving return on capital employed. The announcement triggered a 12% jump in NRW's share price yesterday. I mentioned in the main story Wesfarmers bid for Australian pharmaceutical industries. The bid, at a 20% premium to Friday's closing price, valued API at $680 million and triggered a 21% jump in its share price. It would push the WA-based conglomerate into pharmacies and laser clinics. Wesfarmers has already entered into an agreement to buy Washington H. Soul Pattinson's 19.3% stake in API. The offer came immediately after API downgraded its half-year earnings forecast. The other deal yesterday involved Chalice Mining. It said it would go ahead with a demerger of its Australian gold assets following a strategic review. The new company would focus on discoveries in Victoria and Western Australia. Its share price rose 1.1%. And finally, I get more phone calls from scam artists than I do my mother, and I'm not joking. Mostly, they're supposed to be from government departments, and despite their dire warnings, I'm not in jail yet. Apparently, it's not just me. The competition watchdog said almost 6,500 Australians have reported phone calls from scammers trying to convince them to download software that allows access to home computers and their bank accounts. That's almost double a year ago. And so far this year, scammers have stolen at least $7.2 million. And that's just the official number. Stick around because up next is our daily interview. You might not have heard of today's guest or his company Soprano Design, but you would have dealt with them on many occasions without ever realising it. Pretty much any time you've received a unique code for online banking or a text message to say you've got a parcel coming, or even voted all those years ago for a singer on Australian Idol, you were dealing with Soprano Design's technology. Over 25 years, Dr. Richard Favero has built the company from the ground up, and this year he sold it to a Norwegian company for almost $600 million. It's an incredible story, well worth a listen. That's up next in the Fear and Greed playlist on your favourite podcast platform or at fearandgreed.com.au. It's Tuesday, the 13th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.